Welcome to Guide Guru. We hope this video helps.
In this video, I will show how to sell a put on Fidelity. Open your Fidelity account, enable options trading, and choose the stock ticker you want. Pick a strike price and expiration that match your risk tolerance, then select Sell to open and set your limit price. Confirm the trade details, review margin and cash requirements, and submit the order periodically. Start by balancing premium income and assignment risk when selecting a strike and expiration. Shorter expirations offer faster time decay but lower premiums, while longer expirations pay more income. Use delta to estimate assignment probability and pick strikes with a comfortable buffer from current price. Size positions so a single put assignment won't harm your portfolio, and always fund the cash or margin needed. Place the sell put order using a limit price to control the premium you receive, and consider GTC or day duration based on your plan. Watch fills and be ready to cancel and reprice if market moves away from your desired premium. Understand fees, commissions, and margin impact on potential returns. If assigned, you will buy the stock at the strike, so prepare capital or use rolling tactics to defer assignment.
Thanks for watching. Consider subscribing if we helped you today.